Good morning, I'm Carol Harmer from the International Trading Institute, and these videos that I send out, it would be very helpful for us if you would go to the video, like, subscribe, and then that puts the marketing team in touch with what is required, what you like about these videos, what you don't like about these videos. Can we improve on the markets that I look at? You know, all sorts of things that we're willing and able to be able to do. So following on from pattern recognition, which I did on Friday, I've been looking at charts over the weekend. I wasn't sure what I was going to find this morning, but I've been looking at charts over the weekend, and I'm going to take you to see the dollar Swiss chart. Now the dollar Swiss chart has shown that it's got a double base. You can see it quite clearly here and here. Didn't quite get to it, closed where it opened, went up a fraction, didn't really do any damage on the top side. And if you put that little line in there, which I'm going to do, you can see that we actually just topped that and come down and close lower. Now, if you look at the stochastics and the RSI and the momentum, you can see that they're all at neutral levels. So what that is saying is the market can go either way. So, but with the pattern recognition, you're looking at this from the buy side, because you've got all this support area, this low, high, low, makes the perfect, I call it, well, people call it the W pattern. It's a double bottom, but you can see that there is a W, and that is the criteria we use so that we can, you know, identify price patterns and preempt the market. And I've banged on about this now for 35-40 years. Yeah, I know. But I've banged on about this for all this time, and it really is important that you look at pattern recognition. It's only in the last 40 years that we've had indicators. I mean, when I first started, it was chart based only. You know, we were chartists, chart traders. We learnt how to define patterns. We learnt lots of things, mainly on the run really, because London didn't have all the information. Well, it didn't have any charting people. I know this because I used to be rang by central banks when I worked at Midland to ask me where the market was going. So they didn't have any technical desk or any charting desk. Adding technical indicators came later. Okay, we now have 450. We don't need them. You need 3. Okay, 3. You need RSI, momentum, slow stochastics on a 10-3-3 basis. You need to know pivot points. You need to know moving averages, smooth, the correct ones, and plot them on your chart. They don't be used in trading to take a position. What they are used for is to show you support and resistance levels. Okay, so that's how we use those. We don't do the crossover and the golden cross and oh dear God, the market's already gone away from you by that time. So with this double bottom pattern in the dollar Swiss, we have to look at where we can go. Now, I've put this line on here, which has now become a trend line. It wasn't, it was I call them Carol lines. Okay, so if we hold this consolidation phase and break up above here, you can be assured that the market will go up. If I look at the weekly chart for you, because we all obviously like to confirm all the time, look at the weekly chart. look at the indicators, okay, they're all on oversold levels. So that is another reason for the market to rally. So you're looking for places to buy this. You're looking for around this area up here at 83.14. You're looking to buy a break above this level here, which is at 83.50, so give it a little bit. And you're looking for the market, as I said, to trade higher. Now, if it doesn't, and it breaks down below this level here, you never put your stops at support levels. You don't ever trade the breakout on the first attempt. It's a no-no. You trade the breakout on, I prefer the third, okay, because I want confirmation. And when you're sitting there, I mean, and you don't have to sit there all day, but when you're sitting there and you're watching this market and you leave orders in, you have to be aware of what these algos are doing, and they normally work on a 30 pip reversal. They're there to make your position not profitable. Remember that. So if you've got a big enough pot, you put your stop below that support level by 50 points. Okay, it's not that much, it really isn't, but it will. Nothing is worse when you're a trader, nothing is worse, is when you leave your stop in, the algos take it out, you come back and your original trade is in a profit by far. And that is very demoralizing, because one, you don't want to re-enter that trade because you just got bounced off of it in on the stop. So it's very difficult to get your head around, which is why trading is so psychological. I cannot begin to tell you. You have to be very strong psychologically to trade any market. Okay, because if you second guess all the time, you're never going to trade. So you can't do that. You have to apply psychology. In the course that I've taught now for 30 years, oh dear, 30 years, the biggest segment I have is on pattern recognition and psychology of the market. Your brain is your biggest problem, and we want to get away from that. Okay, so I've given you what I see in the dollar Swiss. I'm going to do a few more videos for you and explain more of what we are actually going to achieve. So you all have a great day, and I will catch you in a bit. Many thanks.